Today, gold is sought after not just for investment purposes and to make jewelry, but it's also used in manufacturing of certain electronic and medical devices. Gold as of March of 2021 was over $1,700 per ounce, and while down about $300 from September of 2020, still up considerably from the levels of $100 an ounce seen 50 years ago. What factors drive the price of this precious metal over time? One is central bank reserves. Central banks hold paper currencies and gold in reserve to protect some of their assets. As central banks diversify their monetary reserves away from paper currencies, they're accumulating into gold, and typically the price of gold rises. Many of the world's nations have reserves that are composed primarily of gold. Bloomberg reported that global central banks have been buying the most gold since the US abandoned the gold standard in 1971. The 2019 figures dipping just modestly from 2018's 50-year record high. Turkey was the largest buyer of gold in 2019, followed by Russia, Poland, and China, according to the World Gold Council. In all, governments bought a total of 650 tons of gold in 2019, down modestly from 656 tons bought in 2018. And it's still near the all-time highs for over the last 50 years. Then there's the value of the US dollar. The price of gold is generally inversely related to the value of the US dollar because the metal is dollar denominated. All else being equal, a stronger US dollar tends to keep the price of gold lower and more controlled. A weaker US dollar is likely to drive the price of gold higher through increasing demand because more gold can be produced when the dollar is weaker. As a result, gold is often seen as a hedge against inflation. Inflation is when prices rise, and by the same token, prices rise as the value of the dollar falls. As inflation ratchets up, so does the price of gold. The worldwide jewelry and industrial demand also dictate the price of gold. Jewelry often accounted for approximately half of the gold demand. That translates to more than 4,400 tons, according to the World Gold Council. India, China, and the United States are large consumers of gold for jewelry in terms of volume. Another 7.5% of demand is attributed to technology and the industrial uses for gold. It is used in the manufacture of medical devices like stents and precision electronics like GPS units. That is projected to rise as gold's industrial demand progresses rapidly. Therefore, gold prices can be affected by the basic theory of supply and demand. As demand for consumer goods such as jewelry and electronic increases, the cost of gold can definitely rise. What are gold production major players in the world? You got China, South Africa, the United States, Australia, Russia, and Peru. The world's gold production affects the price of gold. Another example is supply meeting demand. Gold mine production was roughly 3,260 tons in 2018, up from 2,500 in 2010. However, despite the increase over a 10-year span, gold mining production has not changed significantly since 2016. One reason is that the accessible gold has already been mined. Miners now have to dig deeper to access quality gold reserves. The fact that gold is more challenging to access raises additional problems. Miners are exposed to additional hazards, and the environmental impact is heightened. In short, it costs more to get less gold. These add to the cost of gold mine production, sometimes resulting in higher gold prices. If you want to start investing in gold, silver, or other precious metals, or if you simply have questions or want more information, give us a call or head to our website at noblegoldinvestments.com, or you can hit the link below. If you want more information, continue watching our series. Alternatively, you can also head to our website and download the free guide and get a lot more information.